Good day, traders. Welcome to a very important lecture: how to trade. All right, the mic is good. All right, good. How to trade. If you are new in my community, welcome. If you've been watching me from when I started, welcome, guys. Thank you for always being with me. Now, how to trade. I repeat myself. We have a chart. This is GP card. Okay, you can see all my markups and all of that, tracking 3 days of breakout, 3-day setups, high of month reversals, high of week reversals, low of week reversals, low of month reversals. You can see me identifying trend lines, opening range, closing breakout, micro trend lines, major trend lines from what we see here. Now, there are 5 important things I want traders to always look at when looking to trade a financial market. Whichever market you trade, futures, indexes, gold, oil, whichever one you trade. First of all, we start from a higher time frame point of view. Okay, higher time frame. Okay, we want to see and we want to know from the weekly to the daily which markets are trending to the upside or to the downside, making higher highs or lower lows, or from the higher time frame. Now, the second thing you need to look out for is your monthly highs. Where was your previous monthly high and low? Where is the current monthly high and low? Okay, weekly highs and lows. We must identify previous month's weekly high, weekly low, monthly highs, monthly lows, yearly highs and yearly lows, because we want to position ourselves in a move that will go and invalidate the opening range, the high of month, high of year, high of week, high of day. These levels must be identified. Now, the second thing we would look at is the moving average. Every trader must have the moving average on his chart, the 20 period universal moving EMA. That gives us on every time frame the average price. Okay, now we also want to look at magnets. Now remember, after looking at your higher time frame, daily, weekly, you scale down gradually to smaller time frames. Okay, traders call that top-down analysis. Now we want to look at magnets. Okay, markets have magnets, and this magnet can be, number one, closing price, both the previous and the present. We want to look at daily highs and lows. We want to look at moving average. Yes, we'll look at the moving average on that smaller time frame. These are magnets, okay, for opening price, sorry, opening price. Number 5, we want to look at weekly, monthly highs and lows. Okay, that includes previous and current. Okay, we want to also pay attention to the opening range of the day. Okay, also highs and lows of sessions. Okay, these are magnets. Okay, remember, these are magnets. We want to make sure we identify magnets after doing this. Label this A. B. Okay. And moving average. Okay. So we identify magnets. We have magnets. Under magnets, we have trend lines. Trend lines is a magnet. Okay, so this is under PCD. So under D, we have magnets. Okay, so first of all, we want to identify this. Then when we scale down to smaller time frames, we start identifying these little things. We have indicators that display closing price, previous and present, daily highs and lows, moving average, opening price, weekly, monthly highs and lows, opening range of Asia, which is the opening range of the day, and our trend lines, moving averages on smaller time frame. The indicators and the link in the description. Now, the next thing you want to pay attention to is having a setup. Okay, we want to know if we have a setup. Now, we have various strategies in the market. Okay, we have supply and demand traders, we have ICT, we have SMC, we have the Stacey Burke traders, we have the Al Brooks, Jim Dalton, Peter Brandt patterns on higher time frame, and a whole lot of veterans with strategies in the market. So we want to understand the setup. So for we on this channel, we trade the Stacey Burke, Jim Dalton, and Al Brooks system of trading. By the way, Al Brooks and Jim Dalton are mentors of Stacey Burke. So I would also advise traders to check out these guys, read their books, read their course, and have a very good view of the market. Now, if you can't do that, I'm always here. Whatever I do is a combination of 3 people: Stacey number 1, Al Brooks number 2, and Dalton. Stacey helps me with the strategy of looking for 3 higher closes, 3 days of breakouts, reversal trading from those highs or lows of months, highs of week, okay, but also trend continuation setups, which are his signal days from Stacey's point of view. The opening range of the market at Brooks comes in, helping me understand that if a market has a higher time frame opening, it has a smaller time frame opening and it has a smaller time frame close. Jim Dalton made me understand that when the market is in balance, the first breakout of that range presents a false break reversal or a trend continuation out of that balance range, which is a trading range or a coil. Market in balance, okay, market inside a box. Okay, yes, Stacey talking about price is in a box. Okay, when we get to the edge of the box, how is price behaving at the edge of the box and at the highs of that box in your session? So strategy setup is very important. Are you an ICT trader? Are you a supply and demand trader? Are you this or that in the market? So first you identify that, and then you come down here. For us, we are using the Stacey Burke system. So we look at our chart. Now if you look at this chart, this is the British pound card. I go to the weekly. Okay, this is the process, how to trade. I want to see what the market is doing on the weekly. Okay, sorry about this, guys. Let me hide that the write-ups so you can see how this chart looks like. Okay, we are in an up market. If you look generally, market is going up, but if you look very well, we are in a trading range at a certain point. Okay, so we have a trading range. Look at that market trading inside of a box, high and low. You can see that high and low market was in a trading range at some point. We are sideways, we are coiling on the daily, and we are breaking down the process of that coil. So this here is a downtrend. So when we go to the daily, you see market is dropping down. Okay, market is going down for now. You can see it. We are making what? Lower lows. Look at this chart. Okay, now you see market is making lower lows. So the market comes here, takes out this low, the low of this candle of January 26, 22nd, 23rd, takes out that low. It made a low, pump, made a lower high, dump, lower low. Can you see that lower low, pump? Okay, made another lower low and pump and is dumping. Okay, so we identify that for the meantime on the daily, market is making what? Lower lows and making a downtrend. Now, by the way, markets can be doing a lot of things. The market can be trending upwards and we can have a short-term downtrend against the uptrend, which gives us a 3-day move, 3 days of shorts, 3 days of longs. Okay, that reverses in the direction of the trend. The market can be dumping down. Okay, and we have a 3-day move that continues the reversal to the downside. So whenever I look at my daily, I want to know, are we having a 1, 2, 3 against a trend for a reversal? 3 higher closes, high of week reversal, high of month, low of week, low of month. Now this is why we can have a 3-week setup. 3-week setup. We can have an inside week. We can have a first red week. Okay, we can have first green week. We can have 3 weeks of breakouts when we look at that. Okay, so that is when we start breaking out. We start going to smaller time frame. We start seeing our 3 days of breakouts, 3 higher closes as we see here for a reversal. Now let's go to smaller time frame. Smaller time frame comes in. We check out the 4 hour. What's the 4 hour doing now? If you look at this chart, you notice that as the market is dumping down, it's doing a 1 2 3 to continue. Okay, it's pumping and dumping, making lower lows. Now Stacy would say the formula for higher highs and lower lows: the market is making lower lows, it will pump and dump. If the market is making higher highs, it will dump and pump. Okay, now kindly note that the higher highs and lower lows on the higher time frame can also present micro higher highs and lower lows on smaller time frame. That is to say, in a day, markets can be making lower lows on Monday or higher highs on Monday, and the market is dumping down on the higher time frame. We have micro higher highs and lower lows. Whatever the market is doing on the daily, it will be doing on the 5 minutes. Okay, so identifying all these things, okay, I want to see where is my pattern. Okay, where is my pattern? Where do I know that I have an edge, okay, in this market? So let's put up my analysis. Now look at this chart. This is a 4-hour time frame chart. Now notice everywhere I had analysis done, I am looking for 3 days short, 3 days long, 3 day long for reversals. I'm looking for a 3-day setup. I'm looking for signal days, okay, while identifying my trend lines. You can see my trend lines, you can see my opening range. I'm identifying the opening range. Okay, I'm identifying my magnets. Okay, when I put on the indicator, I'm looking at the moving average on each time frame. Okay, I'm identifying everything I need to identify. Okay, I know that the market is now making lower lows. Now I come to smaller time frame. Okay, let's use this area from here backwards as examples. So we had a market, okay, that is dumping down, but in the process gave us 3 shorts for a reversal, gave us 3 longs again for another reversal. So as the market makes a lower low, that lower low can come out of 3 days of short or 3 lower closes and starts pumping up again for 3 days to give us another reversal. This is why I said Stacy is a reversal trader. Now from this day here, okay, we had, let's break down to small time frame, 2 hours. Yes, now we had from here, this was previous Thursday, okay, which is what, the low of the previous week. Like I said, we want to identify our highs and lows of weeks. Okay, so this year, this is Monday, this is Monday, Tuesday, Wednesday, Thursday, reversal, day 1 short, day 2 short, day 3 short, reversal. We start from here again, the low of the week. We start counting. Okay, now also another very important thing is your day count. Trading SB, you must identify day count. Okay, but you can only identify your day count if you identify your weekly highs and lows, because it is from those extremes that you start seeing your day 1, day 2, day 3. Okay, be it from the low to high or from high to low. That is where you can identify breakouts on every weekly template. Now you can see here, okay, we had day 1, low of week. Remember, we want to identify previous week highs and lows. So that is the low of week. This was the high of previous week. Okay, Monday, that's the high of previous week there. This is the low of the last week. Also, we are in a new week, so we must identify these levels, highs and lows. Okay, every week will give its own highs and lows of week. As we see here, the high of Wednesday last week is our high of this week we just finished from. Happy new month, guys. Now the low of this week, it has its own low of week, which is the low down here. The leg 2 is the current low of last week. So this is the low of week, has broken out of the low of this previous week and has pulled back. So you see why it's important to mark up previous weekly highs and lows. Okay, now we start from here, which gives me a day 1. Okay, this is an inside day. They broke out. So this breakout here of previous days high gives me a day 2. Okay, a breakout again. This is my setup. Okay, this is the setup, the SB setups we want to look. Then we go down to smaller time frame and look for coil, okay, dump and pump, or pump and dump in our session. Okay, now we go down, take this, put here the 3. Very simple, don't need to stress ourselves about fundamentals and all of that unless we are ahead of a major red news. Okay, now you see this gave us what, a 3-day setup that reversed in the final hours of the US session on this day. That becomes a 3-day setup. Okay, we are looking to either continue the trend or reverse. Okay, now the next thing I'm looking for is my opening range. Okay, where is the opening range? We have a new opening range of a new week. Remember, Monday is the opening range of the week, so that is Monday's high and Monday's low right here. Okay, so we have what, a Thursday, Friday, a Friday, Monday, Tuesday reversal, as Stacey calls it, Friday, Monday, Tuesday. Okay, now as we move further for another breakout, we have 3 days of longs. Okay, these are under the setups. Okay, under the setup, we want to look for, under Stacey Burke, we want to look for 3-day setups. Okay, three days of breakouts. Okay, we want to look for 3 higher closes. We want to look for 3 levels of rise. We want to look for signals after this market has presented the moves from 3 days, 3 higher closes, 3 levels of rise, and 4. Okay, 3 levels of rise will fall, 3 levels of fall will rise, 3 higher closes or lower closes. Okay, then we look for signals, which is our FRD, FGD, inside day. Okay, we need to see market fading at weekly highs and lows. Okay, with these setups before we look for reversals or continuation. Okay, then from these setups, okay, we can now start getting our reversal trades, continuation trades. Okay, trend continuation trades and reversal trades after this market has presented all of this. It can be a sell high, dump and pump, a pump and dump sell high setup, or a pump and dump, or a dump and pump buy low sell high setup. Okay, now that those can be reversal trades from the low or from the high, continuation trades from the high or from the low. Okay, so now we've seen the Stacy setups. These are the setups I want to be looking after seeing all of these things from higher time frame, marking up my levels and all of that. Okay, I need all of these things to be on deck. Now as the market trends, okay, like I said, trend lines, I draw a trend, I follow the market with a trend, okay, to see what they are doing. The market is now making higher highs inside of previous weekly level. So we have a higher high, dump, pump, higher high, dump, pump, higher high. 3 days of breakouts. Remember, we want to look for what? 3-day setups, which will now move to become 3 days of breakout, because level 3, day 3 high was broken out of, and they can also close in breakout. So we want to also pay attention to markets that have closed in breakout, because we want to always look for markets that are breaking out, okay, 3-day setups, markets that are breaking lower for a reversal up, markets that are breaking highers for a reversal down. Okay, now we have what? A high of week. This was our high of week. Okay, guess what? The market takes out that high of week. This becomes the 3 days of longs and a new high of week. Okay, we have a high of week reversal setup. Okay, 3 days of longs will reverse, which will now evolve to signals. Okay, so you can either be positioning yourself at a signal here, because this is a signal. Okay, this is an FGD signal. Remember, we want to look for signal days, FGD. Okay, we are looking for signals. Okay, the opening range, we want to identify that. So you see, FGD will start a move to the upside. FRD starts a move to the downside. You see that from here. Also, FRD starting a move to the downside. Now we want to see the market reverse, okay, after 3 days of longs, if the setups present itself in our sessions that we trade. Okay, now you can see here the market breaks down in Asia, pulls back in London, takes out Asia high, previous closing price. Think of your entry point as last night close. So the indicator will help you identify your closing price, your daily highs and lows, your moving average. For now, I'm using a blank chart. If I put on the indicator, you will see how it looks like. Let's put on the indicator. Now you can see the indicator is on. You can see previous monthly highs, previous weekly highs, previous weekly low, previous monthly low, closing price are all appearing, moving averages, session boxes, and all of that. See, opening range highs and lows are being displayed, okay, and projected. So with the indicator, we have the moving average and all of that, but I choose to use a blank chart, because if you can't identify on a blank chart, you don't need an indicator. Okay, you must start by identifying these things on your blank chart before you start using indicators. Okay, now we have a first red day. It's a signal day. Traders would want to, continue selling, which we did on Friday. I gave a signal here into the community. So these are the setups I'm looking for when it happens. This is the entry. I gave a signal from here. So you see, I'm looking for what my setup. So 3 days of breakouts, 3-day setups, okay, will evolve to signals. That is why we start looking for them gradually. So from 3 we go to signal. After it makes a 1 2 3, it takes us to give us a signal day. So we have here a signal day. How do we execute it? We must make sure that market keeps making lower lows below the moving averages, okay, for a pump and dump. Pin hammer, sell entry given to the community, sell signal given to the community. That market moved beyond my expectation. It gave me more than 400% expansion of that range. Okay, now we want to see, you see, now we are executing at weekly highs, daily highs and lows. Okay, very important. We are identifying higher highs, we are identifying lower lows when they start creating that movement. We come back, let's go back to the previous week where I did the same thing. So this was Then January, okay, we had a 3 days of breakouts here, 3 higher closes. Here we have 3 higher closes, 1 2 3 higher closes and a high of week reversal, okay, and 3 levels of rise. So in this case, I saw this build up happening. We want to position ourselves either from the bottom of the reversal or the top of the reversal and maybe hold for a possible 3-day move back. We repeat the same thing again, we keep going. Okay, so this month January was very awesome. We see awesome movement almost every week. So now my job is to continue identifying setups and making sure that I do not make terrible mistakes. So we have here a low of week FGD. Okay, let's put a line there. I will know if that's the low of that week. Yeah, we have a low of week which was Wednesday. Okay, day 1. Okay, remember we need to identify weekly highs and lows. This was the high of previous week. This is the high of previous week. Okay, good. Day 2 breaks out, close as a signal. We have buying opportunities. Okay, day 3, to see continue the trend. Remember, we want to look for trend continuations. Okay, we want to look for trend continuations or reversal trades. Okay, now we have market breaking out further, having higher closes. Remember, 3 higher closes, 1 higher close, 2 and 3 higher closes. Okay, 3 higher closes. Now remember, I said they are the same thing. 3-day setups, 3 days of breakouts, 3 high closes. We have 3 days of breakouts, 3 days of longs. You can see 3 days of longs. Almost everywhere you see me trade 3-day setup, 3 days of longs. You see me there having some reversal that will go on. Okay, so we have that market giving us another breakout of high of week. Okay, a high of week reversal. The high of that week, this was on a Tuesday. That was the high of week. High of that week gave us a reversal. Okay, that reversal became a FRD. So you can see FRD must make lower lows below the moving average. You can see us selling to the downside. In the process, we are still making lower lows now. See, we're making higher highs. Okay, we're making consecutive higher highs. We start making lower lows. From there we start making higher highs again. From there we start making lower lows again. Okay, so the market moves, gives us another signal day, FGD, buy low of the low of session setup, continue. Okay, till another 3-day longs, market reverses again. So highs and lows of week, we want to make sure we identify them, because that is where the 1 count starts from. From there we start seeing signals. So if you can see 3 higher closes, 3 levels of rise, 3 days of longs, 3-day setups, they will evolve to a signal day. Okay, so from higher time frame to lower time frame, I have built, okay, my thesis for the week. I know. Okay, and now I don't want you guys to think, don't think, know that this is what the market is doing. I don't think, I know. Okay, I want to know. I don't want to be a thinker. I want to be a knower, and I want to be a doer. So you have to be a knower, you have to be a doer. Okay, by following these steps presented in this video. If you are new on this channel, okay, this is what I do from higher time frame to lower time frame. I need my moving average in check, okay, which is in the indicator. Now I have made this very easy to track with the development of my screener. Okay, the screener will help you and relieve you of all the stress in looking for all these things. The screener will pick them up and present them to you while you come to the market and mark it up and be sure it looks like what you have on your screen for reversals and continuation trades. Now, while you learn how to identify, if you have a problem with your execution, because identifying is looking from higher time frame to lower time frames before we start looking for 3-day moves, first red day, first green day, and doing our day count also. Okay, identifying magnets and all of that, checking major red news. So if you can identify but you have an issue with execution, then you have to contact me so I can teach you micro balance and price action breakouts in smaller time frame. The micro balance really defines execution on the day when you know what you are looking for. Okay, when you know your strike points, you must know strike points. Strike points are always at the magnets: daily highs, daily lows, session highs, session lows, closing price, EMA, trend lines. Those are our strike points. We want to strike at those levels at all costs. Okay, or we need to mark up our charts like this, be very organized, monitor that market till it gives us an opportunity to enter. Okay, now the screener will help you pick up. This is from last week. Okay, when the market opens, this will reset. The market is now picking up breakout. You see USD Swiss franc 3-day shorts, GBP card 3-day setup. Do you know why? You know why? Like I said, market will keep making what? Lower lows or higher highs. We have the high of week, which is now a new day 1, day 2, and a breakout day 3. So this is a 3-day setup that may be preparing to reverse, okay, or continue for another 3-day short, taking out previous monthly low, okay, where that line is, okay, taking out this low, okay, before giving us a possible reversal. Okay, so the screener will be calculating a breakout or 3-day setup. It will bring them all here. If the closing breakout, it will appear here. In the new day, you will know if yesterday closed in breakout. Okay, now USD Swiss is showing a 3-day short. Okay, this is just making it easy rather than doing the first step I just showed you guys. You see, the market is in 3-day shorts now. Okay, you can see all my analysis looking for and teaching traders. Now you see the market is the breakout have been counted. We have high. Okay, this is Monday's high of week. Day 1 short, day 2 short, day 3 short, closing breakout. By tomorrow you will see a closing breakout. Traders should be looking for what? A continuation or a reversal trade. Okay, so the screener will help you identify, micro balance will help you now execute. Okay, so if you don't want the screener at first, you need to become good by yourself before you use a machine. Then you can question the machine. So you need to think like the developer. Okay, you need to think like me. I can identify by myself without looking at the screener. Okay, the moment you can identify without the screener, you just go to check the screener to confirm if you are right or wrong. So this is how to trade the stacey burke pattern, by identifying all of these things listed above. Okay, and also getting proper mentorship after struggling to learn by yourself. You can see I am very direct. I will not confuse you guys with lots of grammars and lots of words. It's good to be precise and direct as possible. So you can contact me for mentorship if you have further problems with this. Also, you need to understand risk management. So your risk management, we are going beyond our 5 position size. Position size and risk management. Okay, you need to really understand your account risk, what you can afford to lose. Do not be greedy. Okay, use startup positions, which is smaller lots, and then observe the market to see if you can add. If you get very good, you can start targeting strict setups and taking them with precision, okay, with larger amounts. So position size and risk management is very important. When you do all of this and it's time to execute, position sizing, risk management, and trade management. Okay, trade management. Okay, trade management, very important. We must be able to manage our trades, manage our risk, and position sizing. Okay, very important. After doing all of this and it's time to execute, you must identify how much you are willing to lose and your stop loss. Also, stop loss placement. Okay, stop loss placement is very important. Okay, stop loss placement, very important to identify your stop loss using your Fibo or your position size tool on TradingView. You can see it here, short position, long position, or the fib. I love the fib. It helps me to understand exactly how many percentage of the range I will be targeting, so I can close my trades. Okay, so you can see that everything, although there are other things that other traders have learned that you may not hear from me, because I didn't learn from where you learned from. Okay, this is what I know from SB. We look down to balance market and Al Brooks. May the markets go with you guys. I hope this video gives you value. Do well to like and share. Thank you guys. May the markets go with you.